Dear friends, welcome to Weekly View on Markets. Nifty was down by 573 points during this week. Bank Nifty and broader markets also corrected more than Nifty index. Small cap index was down by 7.29% and mid cap index was down by 5.77%. DIIs bought more than FII during this week. So DII buying has outnumbered the FII selling. Despite that, market has fallen. So market fall was led by HNIs and retail investors. Fear index has gone up by more than 10%. That is, India VIX has gone up by more than 10%. So the data points that it is panic selling by HNIs and retail investors, which has pulled down the markets during this week. While the institutional is FIIs and DIIs put together, there is overall buying. I have looked at charts. Charts are at support levels. Coming week is going to be critical for the markets. Technically, market will enter into bear phase if it does not pull off from these support levels. We will have to wait and watch. Long-term investors are getting an opportunity to buy stocks at a discount during these corrections. Even though the index has corrected by 10-12%, many stocks have corrected by 30 to 40%. They are available the, at a discount. Good quality stocks are available at a discount. While it is difficult for the traders, long-term investors should remain cool. Markets will always go up to higher levels after correction. They should use these correction to buy good quality stocks if they have money to invest. Otherwise, they should remain invested and be calm during corrections. Now let us look at indices performance during this week. Nifty closed at 23,431. It lost 573 points, that is 2.39% for the full week. Bank Nifty lost about 4.42%, that is 2,254 points, closed at 48,734. Midcap index lost 3,345 points, that is more than 5.7%, closed at 54,585. Small cap index lost 7.29%, that is 1,388 points, closed at 17,645. So heavy selling in small and mid cap shows that it is HNIs and retail investors who have sold during this week. India VIX, that is the fear index, has gone up by more than 10%, is at 14.91. I am cautiously optimistic on the market and suggest that these kind of dips should be used by investors to add good quality stocks. Now let us look at sectoral performances. Information technology. After TCS announced good results, information technology stocks have recorded a gain of 2.02%. This is the only sector in the market which has gained during the week. Rest all sectors ended in red. PSU banks lost more than 8.07%. Realty sector lost 7.83 points. PSC banks, that is public sector stocks, lost 6.85%. Media stocks lost more than 6%. Consumer durables lost more than 6%. Energy stocks, metal stocks, commodity stocks all lost around 5%. Private banks, manufacturing sector, NBFC sector, auto sector all lost between 4 to 5%. Infra, pharma, healthcare, oil and gas all lost between 2 to 3%. So there was selling all around, especially in mid cap and small cap companies. This shows that the overall market breadth was very much negative. The sentiment was negative as indicated on the charts also. Now let us look at technical charts. This is the daily chart of Nifty index. Here we can see Nifty index recovered from the lows of say 23,400 levels. From there it has gone up to 24,600 level. Again from there a second correction has come, which is now at around 23,400 level. This is a crucial support level. You can see this support line. So by looking at the previous recovery, the market is at the support level. Nifty is at the support level. From here, I expect a pullback. If next week also the Nifty falls below this level, then it will make a lower bottom again, and that will indicate that the intermediate trend is going to be negative. This is the chart of Nifty Midcap Index. Here we can see it had made a higher top. After that, it has made a lower top. It has made a lower bottom here. Now, this is slightly above this earlier lower bottom. If next week Nifty index falls below this support line, then it will make a lower bottom also. So, lower tops and lower bottoms indicate that the trend has changed and it will be in a bearish trend. So that is why next week is going to be critical for the markets. This is the chart of Nifty small cap index. Here also it, the chart is looking similar. After making a higher top, it has made a lower top here. Again, the correction has started. If next week, if it falls below the support line, then it will enter into a intermediate bearing trend. The Bank Nifty chart. This is the daily chart of Bank Nifty. The Bank Nifty chart looks really bad. It has already closed below the crucial support levels, and the next support level is quite far off. It is at around 46,900. So we'll have to wait and watch. The Bank Nifty chart is not looking good at all. It has already entered into a bearish trend. We'll have to see. Next week, some banks are going to announce their quarterly results. If those results are good, there is a possibility that Bank Nifty may follow from these levels. Now let us look at some of the fundamental parameters of economy and the markets. Macroeconomic parameters continue to be a mixed bag. Some parameters are improving while some other parameters are deteriorating. But overall, I feel that there is nothing much to fear about Indian economy. Most of the volatility is coming from the global markets, especially the US markets have been correcting, and that has an impact on the Indian market and also other global markets. RBI forex reserves is at 634.5 billions. It is down by 5.6 billions. Why it is down is that RBI must be intervening in the forex market, and RBI is selling dollars to stabilize the rupee, which has been continuously depreciating. Rupee has depreciated to a record low level of 85.97. It may breach 86 in the coming days if the same trend continues. Dollar index is strengthening. It is crossed 109. Just 6 months back, it was at 102 level. Dollar index was at 102. It has moved up to 109.64. So this shows that there is a demand, especially after Trump has been elected as presidential candidate in US. The dollar index has surged from 105 to 109. It is the impact of the strengthening dollar that rupee and all other currencies are weakening. Brent crude price also has gone up from 76 level to 79.79 US dollars per barrel. Rising crude price is another worry for Indian economy. If crude continues to rise beyond 80, $85 per barrel, it is not good for the Indian economy. There will be inflationary pressure on the Indian economy. FIIs have sold 16,854 crore during this week, but DIIs have bought 21,682 crore. We can see that DII buying is more than FII selling, but still the market has corrected. That is why I have been telling that it is retail investors and HNIs who are pulling down the market. Integrated industrial production, that is IIP data for the November month has come at 5.2%. Means eight core sectors in the economy have grown faster comparing to last year. It was just 2.5% in November 23. November 24 is 5.2%. So there is a good growth in the industrial output in the core sectors. Services PMI for December 24 has come at 59.3 from earlier 58.4. So this also shows that service sector is expanding. Core industries are doing well. So there is nothing to worry. Growth is likely to come back in the economy. The GDP estimate for the current financial year is revised to 6.4. In the beginning of the year, it was 7.2. The estimate was 7.2%. Now it has been revised downwards to 6.4. It is the lowest growth in the last 4 years. Earlier year growth was higher because of the lower base effect. During 2021-22, due to COVID, the economy was down. From there, economy has picked up. So percentage-wise, the growth was showing higher figures. Now we are on a higher base. That is why the growth is at 6.4, but it has been revised downward. That is a caution. Even 6.4% growth is quite a good growth. Markets have factored in 7.2% GDP growth. That is why market had rallied earlier. Now, since GDP growth is being revised downwards, there is a correction in the market which is adjusting to the new GDP estimate and also new corporate profits. The profits for the second quarter and third quarters are below the estimates. That is why we are seeing a correction in the markets. But this correction in the market is giving an opportunity to buy good stocks at lower levels. Charts indicate that market is at support level. Pullback from here is expected, or even there may be a sharp correction for a few days. But long-term investor really need not to worry. This is giving you opportunity to buy good quality stocks at 30-40% discounts. The market history has shown that after every correction, market goes up to higher levels and it will cross the previous highs. That is what is the market history in India. So that is why long-term investors should not get worried. They should hold on to their investments. Mutual fund investors should continue their SIPs. After correction, the mutual fund investors will get better returns because they are investing at lower levels during correction. This is all for this week. If you like my video, please share with your friends. You can subscribe to my channel. You can ask your questions. We will meet again next week. Thank you.